Quick explanation of the topic, credit note. What is a credit note? A credit note is also known as credit memo. It is a commercial document issued by a seller to the buyer. It acts as an evidence of sales returns and reduction of the amount owed by the buyer. Why is credit note issued? When a customer returns goods due to defects, damages, or dissatisfaction with the product. When the customer has been overcharged and the seller needs to correct the error. If there was an error in the pricing on the original invoice, such as incorrect discounts or promotional pricing not applied. If some of the goods or services were not delivered or rendered to the customer. Let us explain credit note with the help of an example. ABC company purchases goods worth 50,000 from Amazon in a B2B transaction. However, 10,000 worth of goods were found damaged, and this was notified to Amazon at the time of actual delivery. Now, Amazon issues a credit note for 10,000 in the name of company ABC, which is the buyer. This reduces the accounts receivable for Amazon by 10,000, and the buyer is only required to pay 40,000. Some key highlights of credit note. A credit note usually shows a negative amount. The sales return book is updated on the basis of credit notes. It is a formal document recognized as a legal record and used for audit purposes. As an issuer of the credit note, it reduces your amount receivable, reflecting a decrease in revenue.